Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live. Excuse me. Excuse me. And today is Friday, October 18th, 2019. We are now in the final hour of the trading day, and we are also in the final hour of the trading week. As I mention each day, I am primarily an end-of-day trader. I believe that the prices of the end of the day, at the close of the day, are the most valid prices to make my buying and selling decisions from. During the day, you have the algorithms, you have the day traders battling it out, and to what I believe is a lot of noise. At the end of the day, large financial institutions, the market makers come in. They're the most well-equipped. They have the best information. They have the most money, and they start moving the prices to where they believe are the most valid prices, and therefore I'm going to follow them and make my buying and selling decisions based upon those closing prices. So anyway, well, we are having a bit of a down day today. Dow Jones down 182 points, 0.68%. The NASDAQ is down 50 points, 0.62%, and the S&P is down 5 points, 0.18%. So yeah, we had kind of a big day on the downside here today. We've been creeping up and going up. It's been pretty nice, but I guess, as we know, the market does not go up all the time. So fairly substantial down day today. So just want to make sure everyone can hear me. I think they can, because I see Mount Doji. Hey buddy, how you doing? Good to see you, Mount Doji. Always nice to have you here. Jackson is here. Good morning. Hello, sir. How you doing? Good to see you from Australia. And always nice to have you here. Steve Burns. Hi, Greg. Well, today was volatility spike. Hi, Steve. Yes, it was. It's been some volatility today, and but of course we always have to remember that can happen. So, but yeah, the bears showed up today. So always good to see you, Steve. Thank you for coming by. Thank you so much for including me on your Twitter list today. I appreciate that. Always an honor, and it's always an honor to have you here, Steve. And by the way, Steve, I listened to that podcast that you were on Trading Justice, and man, that was fantastic. That was a really good podcast, and if you guys haven't listened to that, I am going to put it in the chat right here right now, where Steve was interviewed on tradingjustice.com. Just a great podcast, summed everything up, about how you look at trading. So I would highly recommend everyone listening to that, and the link is in the chat there. Gamer Squad, hey, how you doing, sir? Nice to see you. Thank you for coming back. Always nice to have you here. Murat, hey buddy, what's going on? Here. I'm taking roll. Nice to see you, Murat. Murat's our friend from Norway. Hey, Kurt, how you doing? Good to see you, my friend. Hope you're doing well. Thank you for coming by. Core is still rising. Is it really? That was that really good setup that Mount Doji pointed out to us a couple days ago. Fantastic. Yeah, that was a beautiful V2 over the moving averages, over the 50 RSI, bullish engulfing bar. So glad you have that, Mount Doji. Yeah, it's up nicely today as well. That's awesome. You're welcome, Steve. You're welcome. Kurt says, Steve, great podcast, sir. Yep, it was good. It was really good. So, all right. Well, listen, the plan for today, as usual, we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to take a look at when I bought them, why I bought them, and more importantly, how I'm going to manage them either to the upside or to the downside. After that, we're going to spend some time on trader psychology. As you know, trader psychology, in my opinion, is the most important skill that you can learn, or in other words, managing your emotions is the most important skill that you can learn. And when I say managing emotions, what I really mean is doing things that you don't want to do, don't doing things that you do want to do, and following your plan. It's really as simple as that. But it's a skill to be able to do that, just like it's a skill to be able to read the charts, look for entries, exits, all that kind of stuff. But you can have the best plan, but if you don't follow it, doesn't mean anything, and that circles back to trader psychology. So I'm going to do a little bit on trader psychology and the emotions of trading. Hopefully by hearing this every day, you'll rub off on you and you'll start internalizing it and realizing how important it is. Then we're going to go through my watch list. We're going to take a look at the charts. We're going to look at all the support resistance levels, all the different indicators. As I mentioned each day, I look at indicators as groups of buyers, and if you buy a stock and you want it to go up, makes sense that you want to be in the company of as many buyers as possible. The more buyers you have, the more likely it will go up. So with that said, looking for indicators that line up together. If I look at one indicator as a group of buyers, then that's good. But if I have 2 or 3 or 4 indicators lining up at the same time, then I look at that as more buyers, right? 2, 3, or 4 groups of buyers. And again, if you want something to go up, it's important that you have as many buyers as possible. So we'll go down through the charts. We'll look at indicators like RSI and MACD, moving averages, ATR channels, and we'll see if we can see something lining up with a good entry possibility at the end of the day. And if there's something good, I will go ahead and enter the position, and then we'll manage it going forward. And if there's nothing, then I just won't take anything, right? So that's what we're going to do. And then after that, after the market closes, if anybody has any questions about anything I discussed today, you're not clear on or confused, please let me know. Just type it in the chat and I'm happy to go over it and answer your questions, right? And then if you want me to take a look at any stock symbols, I am also happy to do that. If you feel like there's a stock symbol today that looks really good and you'd like me to discuss it before the end of the market today, before the close, put it in the chat. Maybe put a little star by it, asterisk or something, so I know it's more time sensitive. So all right, that is the plan for today. So if you guys can hold on, give me about 40 seconds. I will be right back after the legal disclaimer. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Alrighty. Let's see. Mount Doji says, just downloaded the podcast now. Steve should have a page on New Trader U with links to all his interviews for me to listen to. Maybe he does. I'm not sure. But yeah, that would be a good idea. Hey, Jesse. Good to see you, my friend. Hope you're doing well. Jackson says, I'll have a listen, Steve. Also been listening to Moving Averages 101 as I drive to places. Oh, that's good. It's a great book. It's a really good book, Jackson. Steve says, great idea, Mount Doji. There are a lot of them. Most popular ones was with Chat with Traders that had 83,000 listens and 1,100 likes. Wow. Jackson says, up to 6 listen in the past week. You've listened to Moving Averages 101 6 times. That's fantastic. Yep, you'll get something out of it every single time. So, all right, well, let's turn our attention back to the markets and we'll see what's going on. So I did buy Russell, the IWM, back here on the 15th of October. I bought it when we had a close back over the 200-day moving average. I bought it here at 151.39. The close under and back over on the Russell 2000 doesn't backtest great, but we also had this MACD crossover at the same time. So the reason I took it is it gave me a good risk to reward ratio. If I was wrong, I'd be wrong small under the 200. And if I were right and a momentum trend was starting, which, the cross of the MACD here might indicate was happening, that's why I bought it, right? Because it gave me a good risk to reward, and I had a couple indicators trigger. So anyway, it's been a good trade so far. Moved up a little bit. We did hit some profit targets yesterday. You can see today was much lower, and it did rebound. It actually tested the 200-day moving average again, and it bounced off there. So just about one ATR from my entry. As far as how high it got after my entry. So, this is going to turn into a discretionary or trailing stop for me at this point. If we would have closed below yesterday's low, I probably most likely would have gotten out. But at the moment, it looks like we are above the low of yesterday. So as long as we close above the low of yesterday, I will continue to go ahead and hold this position. So MasterCard, I did buy MasterCard back here on the 14th of October. I bought it when we had the 1050 EMA cross. This is a good back-tested approach to trading MasterCard. Next day, it did go up. We hit some profit targets yesterday. We hit another profit target, but it's kind of stalled out in this area. This is not a completely mechanical robot trade for me. It's a discretionary trade, but I just use the entry. I use the 1050 EMA as my entry. But today, we did get close to, almost very, very close, within pennies from my entry to one ATR move away. So I have to look at this and say, okay, do I want to wait, stay in this for the 10 to cross back below the 50-day moving average, being that we did get close to one ATR move from my entry. Let's look at this. We've lost the 10, we've lost the 50, we've lost the 50 RSI. We did bounce off of the 100, which is positive, and it has come on more volume today than yesterday. So all in all, to me, this looks fairly bearish. This bar is larger than one ATR. We've lost all these moving averages all in one day and lost the 50 and on strong volume. So what I'm going to do is I'm going to go ahead and just sell this at the end of the day. We're back into the value zone. So, I'll just wait and be patient and look for some kind of sideways movement, see that there's no more supply coming into the market, and see if I can get another entry. But again, I use the 1050 EMA as my entry signal. It did move up. We did hit a couple profit targets, which now, of course, I'm really glad we did, right? Because we locked in some profits at higher levels, at profitable levels. And so we took chips off the table. So it makes this move down here hurt less. We lost less and we made some on the upside. So that's why I'm a fan of phasing out. It doesn't mean it's the be all end all. It just fits my personality. And it's important to find a trading system that fits your personality. So being that we lost the 10 and the 50 and the 20 and we're under the 50, I think I'm just going to go ahead and lock in this loss today. So, and then I'll just have to wait for some kind of other setup. On the plus side, we do have a little support. It has here, it has rejected the 100-day moving average, but all in all, I think there's more negatives than positives here. And because we're back in the value zone, I could get another valid entry with the V1, V2 in the value zone. But here's another example of going above the value zone and it wanting to come back in, and that's what it did. So most likely, unless we have some kind of miraculous recovery today at the end of the day, I'll go ahead and just lock in this loss. All right, so unlike MasterCard, this is a completely mechanical trade for me. I did buy the Qs back here on the 11th of October when the 5 EMA crossed over the 20 EMA. Did move up nicely since, in the last 4 days since I bought it, and grateful that I did take some profit up here at these levels. Today, it's hanging in much better than MasterCard. Hasn't lost all the moving averages. We're still above 50. But even if it had and the 5 was still above the 20, I would still keep it because, when I designate something a mechanical trade, I trade it mechanically no matter what the price action does. So anyway, nothing here today. The 5 is still holding the 20, so I am going to keep it. All right, and then lastly, we have the overnight SPY trade, and in case we have some new viewers today, I do want to explain why I do buy the SPY each day and sell it the next morning. But this is based upon a long-term profitable back tested approach from Liz Ann Saunders from @Bespoke Invest on Twitter. But with this, you have two options. The first option would be you could buy the SPY SPY ETF tracking of the S&P 500 if you bought it each day at the open and sold it at the close each day from 1993 each day. Buy at the open, sell to close. Buy at the open, sell to close. If you would have used this approach each day from 1993, you'd have actually returned a negative 13.9% return for all your trouble. But if you did the opposite, which is what I do, you buy the SPY at the close each day, sell it first thing the next morning, buy at the close, sell the next morning, buy at the close, sell the next morning. If you would have used this approach, you would have actually returned 634.2%. So using the buy in the afternoon, sell in the morning, plus 634.2, buying in the morning, sell in the afternoon, this approach, negative 13.9. So you can see the buying in the afternoon, selling in the morning is a much better approach. And this chart shows the blue line is the buy in the afternoon, sell in the morning. The orange chart is the buy in the morning, sell in the afternoon. And you can see there's a huge difference. So this does backtest well. Since 1993, it has shown that it does have a good built-in positive edge or expectancy on this trade. So that is why I use it, and that is why I buy it every day at the close, sell in the morning. And I really like this chart, everybody, because no matter how good of a trading system you have or a trading approach, even if it does have a quantified edge, it shows you that it doesn't go straight up. There's ups and downs and bumps and bruises along the way. So always keep that in mind. Always keep in mind position sizing, position size correctly, because you never know when you're going to go into a drawdown, even though in the long term it has an edge. So I use a maximum of 10% of my position size. So if I had a $100,000 account, I would buy no more than 10% of the SPY each afternoon and sell it the next morning. So with that being said, let's take a look at the SPY. So I did buy the SPY yesterday at $299.28 at the end of the day, and I sold it this morning for a loss at $298.70. So about 58-cent loss, not too bad. It was much lower earlier in the day, but that's how it goes. You know, sometimes you have wins, sometimes you have losses. Using this approach in May, I lost 80% of my overnight SPY trades, 80%. But since I've been using it since February 2026, it's been extremely profitable. As a matter of fact, yesterday I hit a yearly high on this approach, on the overnight SPYs. So as you can see, yesterday we bought at Wednesday's close and had a nice gap up in the morning. So we did take a little bit of a loss today, but that's just part of it. You can't get too excited or can't get too down on any one loss. Remember, we have to look at this at the long term. We need to look at trading as trading for the long term. Whatever happens, you know, on any day really shouldn't make a difference. You want to look at the long term. And if you're trading correctly with good trading approaches, your edge should play out in the long term. But anything can happen in the short term. So that is it. I will be buying the SPY today here again at the end of the day. Alrighty. Oops. Stephen Winters, hey, how you doing, sir? Nice to have you come by. Thank you very much. You checked out POOD and RNG for me last week. Thank you. Ended up selling those calls on them this week and crushed it. Oh, fantastic. Glad to hear that. You ended up selling those calls. You had calls and then you sold them, or you initially sold them for premium? Well, looks like what? Oh. QOD. So well, regardless, Stephen, I'm glad it worked out. I'm really glad it worked out. Uh, Jackson says only way to get info through my thick heads repetition. Yeah, that's all of us. Jackson says regarding IWM, you've already phased out. Yes, of course. Yes, I have. You know, I bought it back here. I believe I had one phase out here. I think I had close to two phase outs yesterday. And so, yeah, Jackson, that's the reason I phase out. I mean, whenever, you know, the way my approach to trading is whenever the market gives me something, I'm going to take something. If somebody really wants to buy at higher prices, I'm happy to sell them some of my shares at higher prices. Not all of it, but just a small percentage. And when we have our lessons, I'm going to teach you all this. But, you know, if you buy something here and it just goes up and up and up, you're like, ah, well, I sold lower, lower, lower when you were phasing out. But to me, that's okay because I'm still happy. I have some positions left going up still, and I, you know, to get out some at the lower doesn't bother me at all. And then when you have days where it goes up and then it falls back down, then you're really glad that you lock some in at profitable levels. So, Stephen, on RNG, I'm not getting today's data. That's one of those issues that trade navigators have here. Let me look over on this other. Let me look over on this other chart. Oh, wow. Whoa. So this is yesterday, but today now we're down here at 160.65. So we're down in this range. So it's had a big day down, 5% down. So Stefan, did you sell calls? Oh, here it is. Sold credit spreads that were initially in the money, 17 covered at 180. Okay, fantastic. Fantastic. Steven says the overnight SPY trade is an example of trading model with an edge. Yes, the overnight SPY trade is, you know, so far so has been really good. And of course, you know, we looked at that chart, we looked at the long term. There's ups and downs, bumps and bruises, but you know, it has shown over time that it does have an edge. And you know, playing or trading for the long term, staying in position sizing correctly, you know, allows you to stay in the game to let that long-term edge play out for you. So, Jackson said, Greg, those dotted lines on your chart near SPY. Oh, the little dotted lines here was my entry yesterday, 299.28, and the red dotted line here, 298.70. This was my exit. So I'm showing that this is where I bought, this is where I sold. So this shows the loss overnight. If I had a gain, of course, the big dotted lines would be above. So, all right. Let me take a quick look over here. All right, so listen, this is the time of the podcast where I do like to do a little bit on trader psychology, trading wisdom, trading words of wisdom, and you know, there are some really good channels on Twitter that you guys can follow that talk about trading psychology, that have good sayings, you know, good advice about trading psychology, and I like to go through these each day, and when I find something that I think is relevant or important for the channel, I like to cut it out and then talk about it. But this is from Lone Stock Trader, at Lone Stock Trader on Twitter. And this is one of those channels. Fantastic channel. I really like to read all his posts. They're very helpful. So I would recommend you guys going to his channel, subscribing and reading his posts every day, because he really does have good information. He knows what he's talking about. He understands the importance of trader psychology. But Lone Stock Trader says, successful trading is not about trading without emotions, not feeling fear or greed anymore. It's about feeling fear and greed, but still being able to take the best long-term or it's about feeling fear and greed, but still being able to take the best long-term decision. And it's so true. If you guys have read Trading in the Zone by Mark Rogers, which I really suggest, it's a wonderful book. But when I read it, he said, you shouldn't feel any emotions. The best traders in the world don't feel any emotions, no matter what. They put on their trade, they determine their risk, and they sit back emotionless, and it goes one way or the other. So I know he says that, and maybe there are some traders that are that elevated that they don't fear, or they don't feel, fear or greed anymore. But I guess I'm not there, because I still feel it as much as I don't want to. I still feel it, but even though I still feel it, it doesn't prohibit me from making my trade. And so, unless you're some otherworldly being and you're so elevated that you don't feel feel fear and greed anymore, my hat's off to you. But I'm a mere mortal that does still feel this stuff, but I'm able to overcome it and still take the trades when I'm supposed to, and I'm still supposed to get out when I'm supposed to. But that's the key. You're going to feel it. I think most of you are going to be uncomfortable with, wanting more profit or scared of the losses, but you have to overcome that. You can feel it. In my opinion, it's okay to feel it, but don't let it dictate. If you're scared, but you have a good signal, you should probably still take that signal, right? Anyway, thank you, Lone Stock Trader. I think it's important, but just real quickly, successful trading is not about trading without emotion, not feeling fear or greed anymore. It's about feeling fear and greed, but still being able to take the best long-term decision. So doesn't matter if you feel fear, doesn't matter if you feel greed. Just don't take a position if you're not supposed to, but you want to, and do take a position if you don't want to, but your system tells you. So anyway, thanks, Lone Stock Trader. All right. Merritt says, hi, Greg and all. I was just listening since my daughter didn't let me to sit down. Oh, all right. Sometimes that happens. All right. Well, let us get down to business and see if there's anything interesting for us today. Oh my goodness. Look at Apple today, up strong. Earlier today, I looked at Apple and it was down. Now it's up $2 on a day like this. So that's pretty good, But even with that, I can't buy Apple here. It's near the third ATR channel. I need to be patient with Apple, wait for a pullback into the value zone, wait for the stock to quit going down, go sideways, showing that the supply is drying up. Then I need to look for some kind of V1 or V2. And by the way, if you're new to the channel, I talk a lot about V1s, V2s. I do have a link in the description of this video. I have 4 links to 4 different lessons. They're free. They're on YouTube. One of them is specifically about V1s, V2s, if you'd like to learn more about it. Like I said, it's in the description of this video, but you're going to hear me talk a lot about V1s, V2s. So Apple, very strong today. I'm looking for a pullback into the value zone. When I talk about the value zone is underneath the 1 ATR channel and above the negative 1 ATR channel. This is what I consider the value zone. The third ATR channel up here and the negative third ATR channel down here, these are levels that I really have to look out for, because 90% of prices stay under the third ATR channel. Or in other words, when they get up to the third ATR channel, they usually come back in the channel. To the downside, the negative third ATR channel usually holds 90% of the prices, meaning that once it gets down here, you see some kind of move up, not all the time, but about 90% of the time. So this is where I play, in between the negative third and above the third. And when it gets up close to the third ATR channel, I'm not going to buy it. I feel like the elastic band's been pulled already pretty tight, and 90% of the time this is going to come down from here. So why would I want to buy it up here? right? I would rather look for something down here giving me a good risk to reward, giving me, from the negative third to the positive third. I have a lot more possible move this way, buying down here. So anyway, Apple is too high. It's near the third ATR channel. I want to see it pull back in the value zone. Look for a V1, V2. If that fails, I want to look for possibly, some kind of deep dip buy of a 30 RSI. And if it has a confluence or combination with the negative third ATR channel, that would be excellent. Or a 5 EMA crossing under the 20 EMA and then back over, that would be another approach for Apple. Adobe. So Adobe lost the 200-day yesterday, which was not good. Whenever you lose the 200-day moving average, it's not good. There are buyers at the 200-day moving average, but if those buyers, even with that whole new group of buyers that steps in at the 200-day moving average, if it's lost, it's never a good sign, because it means those 200-day moving average buyers couldn't hold it up. So anyway, we've lost the 200. We've actually even lost the 250-day moving average. Let's see how low we got today RSI wise. We got down to 35, so not quite low enough for me to buy here. It's possible with the close under 250, and then possibly next week if we have a close above 250, that might be interesting. But this looks pretty weak. It looks like there's a lot of selling on Adobe at this point. So want to be patient, wait for a real good setup. And ideally the type of setup I would like would be down in this area, the 30 RSI in conjunction with, close to the third ATR channel. Because like I said, 90% of prices stay above the third ATR channel. So if I could get a confluence of a 30 RSI somewhere in this with the third ATR channel underneath me, that would be ideal, but nothing there yet. Okay, so advanced micro devices down a little bit, still above the 1 ATR channel. Anything above the 1 ATR channel I consider overvalued. Again, we've had a nice move up. I wouldn't be surprised with some kind of pullback into the value zone. MACD is nice, big, strong positive. So I would be looking to buy that first dip with this big, strong move. It's just overextended right here. I just want to wait for it to come back into the value zone, move sideways, show that the selling has stopped, and look for some kind of V1, V2 to the upside. Amazon. So Amazon did reject the 200-day yesterday. And then today it's down 22 points. So it's down 1.26%. Yesterday we did close above the value zone. So again, and MACD is very strong. So I'm not concerned that, okay, we're just going down now, but we were just a little overbought in regards to the ATR channels. We were above value, but now we're back into value. But, now I would turn my attention on Amazon to, now that we're in the value zone, looking for some sideways movement, maybe a V1, V2, and then that would be my entry. So nothing yet on Amazon, although, let me take a look real quick. The other approach would be this is a good back-tested crossover approach on Amazon, the 550 simple moving average. If the 5 cross back over the 50 on a closing basis, that would be a good entry signal, and that does back test well for Amazon. So I don't see anything today on Amazon right now. Ooh, look at this, everybody. Boeing down 6.26%. This is a monster sell-off. Look at this volume. Now, I believe we got close to under 30 RSI today. 29.68, somewhere similar, but very close to the 30, and that's where it bounced. It's under the third ATR channel, which I don't like, but it did go under 30 back over 30. Let's look at it on the weekly time frame. So on the weekly, this 100-week moving average has acted as support, and right now it has acted as support as well. Boy, this is a tough one. If under 30 back over 30, it's legitimate. I don't like that it lost the 1 ATR channel. I don't like that the volume is absolutely huge. Yeah, this is one of those situations where you're either going to get a really good purchase on this at a low price, or but it's 30.69. I mean, your stop would be a close below the 30, but I don't like that it lost the 30 here. I'm going to just wait and see if we can get some kind of stabilization here at all. We'll close under the 30. I mean, who knows? We don't know where it's going to close. It could close under 30, and then we wouldn't even have to think about it. But I'll mark it down here just in case, just so we watch it at the end of the day. But that's a monster big day. I mean, to lose 6% of your company in one day on a company the size of Boeing. Caterpillar, down a little bit. Again, too high. It's above the 1 ATR channel. Got close to the 3rd ATR channel. It's strong. Nothing wrong with it. But again, when you're overvalued, I want to see it come back into value and look for a dip buy. Dow Jones Industrial. This almost looks like a bad tick, but this is certainly a V1. This is like the biggest V1 of all times, right? We had yesterday's high. We took out yesterday's high. We're closing underneath yesterday's high, rejecting the 1 ATR channel, got close to the 3rd ATR channel, rejected these previous highs. It's very bearish. I mean, really, it's very, very bearish the way that I look at this. So nothing on Dow Jones. Walt Disney had that big day up yesterday, rejected the 50 EMA, coming back into value. MACD is positive, but now that we're into value, I'm looking for a higher low V1, V2, but nothing today. Etsy has had a strong move, did get above the 1 ATR channel. I wouldn't buy up here, too high, but now we're back in the value zone, which is good. So we're back in value. So now I need to see this move sideways and look for a V1, V2. I would be very happy to buy a V1 or V2 now that we're back in the value zone, especially after this nice move up, strong momentum. So, trees don't grow to the sky, but this is totally normal. Doesn't mean we're crashing down to the bottom now. Just means we're back in the value zone. I'd like to see it move sideways. Ford, very strong today. Finally did break out above the 200-day yesterday. A little high for me to buy over the 200-day because it was like 1.5, 1 and 5/8 into the above the 1 ATR channel. Still did move up today, but like with a lot of these stocks, now if it came back down to the value zone, I look for that dip, look for a V1, V2 as my entry. Facebook, so Facebook tried to go up higher today. V1 to the downside. The bar is larger than 1 ATR. And why that's significant, if you have a bar that's within 1 ATR, it's just average. But if you have a bar that's larger than 1 ATR, it takes a lot of buying or selling to get something to move more than 1 ATR, either to the upside or to the downside. And, this is definitely over 1 ATR, maybe 1.5 ATRs. So, this looks fairly bearish here. Again, we've had a nice move up, but we got extended. So, coming back down into value is what I'm looking for. And it doesn't mean the chart is dead or super bearish, but it just means short term this seems bearish. But I would be looking for some kind of V1, V2 back here in the value zone. 5 up today. That's good. But again, this one hasn't come back down, but we're extended over the 1 ATR, so I don't like to buy up here. I'd rather buy in the value zone or lower. So like a lot of stocks here, I would like to see this come back into the value zone. Gold. This is the gold miners ETF. We lost the 1 ATR channel. We're rallying back into the ATR channel. I'd like to see this go a little bit higher, then have a little bit of a pullback and look for a higher low V1 or V2. Gold actually down today, which is surprising. But what I'd be looking for on gold is I'd be looking for a 520 EMA crossover. It went under here. Now I'm looking for the 5 to cross over the 20 EMA on a closing basis, and if that happens, I will go ahead and take that signal. And I would like, if it happens, I'd like the prices ideally to be under this 1 ATR channel. Google down today. No real chart damage done here, but we're over the 1 ATR channel. Again, you know, this is very positive, but it's normal for it to pull back. So I'd be looking for a pullback into value and looking for some kind of V1 or V2 to get me long in this. Goldman Sachs bucking the trend today, which is fantastic. It did have a 520 crossover a couple days ago. I didn't take it because I had MasterCard and I didn't want double the correlation. Look, I mean, it's up a little today, not much, but compared to the rest of the market, that is very strong, right? It's strong that it's up on a down day for the larger market. So the relative strength is pretty good on Goldman Sachs, so that's good. IBB down here a bit today. It did have the 520 crossover. I just elected not to take the trade, and then it did move up for a couple days. Now it's about equal to where I would have bought it if I would have used this signal, but I'm just going to wait for this to pull back. Intel above value zone, coming back into value zone. Looking for a V1, V2 to get me long back into value. Now that I'm back in the value zone. Russell we have. As long as it closes above yesterday's low, I will continue to keep this trade. Bought this back here with the break over the 200, break and close back over the 200 at the same time. We have a positive MACD, and we were in the value zone, which is a good area to buy it. My goodness, everybody, look at this. Unbelievable. There was some asbestos news on Johnson & Johnson. I mean, obviously, this is a perfect example of a large bar, larger than 1 ATR. This has got to be like 4 ATRs or something like that to the downside. Huge volume means that there was a ton of selling. Again, if you can get a bar to move larger than 1 ATR, that means there's a lot of buying or a lot of selling. There was a huge amount of selling here. It's a 4312 RSI. You know, I wouldn't step in and buy this until at the very least bounce off the 30 RSI, or settled down for a while, had a V1, V2, something like that. But geez, that's a big down day. Coca-Cola up big today. I don't know why this is putting this here, but this is the current day right here. Had earnings, had really good earnings. You know, if you would have gambled on earnings, it would have paid off for you today, right? But in my personal opinion, I never want to gamble on earnings. It really is a gamble. You don't know what's going to happen. Even if the numbers are good, it doesn't mean it's going to go up. The price could have already the stock market could have already factored it in, and you get nothing for gambling in the market. If you want to get something for gambling, go to Las Vegas, you know, get a free show, get a free room, and at least, you know, get a buffet, get something for it, but you're not going to get anything for gambling in the market. So it's just a hard, fast rule. I never gamble in front of earnings. Lockheed Martin getting beat up. We are getting close to the negative third ATR channel, which is interesting. Remember, 90% of prices stay above here and 90% of prices stay below here. Third ATR channel, negative third. Just because you're down here doesn't mean you want to go ahead and buy, all right? Just because you're down, you're like, well, Greg said that 90% of prices. Well, remember, I said 90. Sometimes 10% do go, and they go in a big way. But, you know, now that we're getting down here, okay, it's becoming a little interesting. If I could get a confluence of like a 30 RSI at the same time we're at the 1 ATR, third ATR channel, then maybe a V1 or V2, that might be an area, but it's not quite there yet for me. MasterCard, you know, like I said, bought this on this 5 1050 EMA cross. This is a good back-tested long-term approach, but not every trade works. Just glad that we did hit some profit targets before we had this down move. The 10 is still over the 50, right? But we got very close to going 1 ATR into the profit. At that point I'm going to start instituting some kind of trailing stop, and there's all sorts of trailing stops here today. Closed below the previous day's low, took out all the moving averages, lost the 50 RSI. So I am going to go ahead and just exit this at the end of the day and just take a loss. But again, try to be positive and try to look at the bright side. And if you had phased out, you did take some profits up here, which is good in itself, and it did mitigate today's loss as well. So always try to be positive, even when you take a loss on your trade. Don't dwell on the negative. Altria Group, very, very, very strong, up at the third ATR channel. If I was long this is where I would be looking for a reason to get out of my trade, because 90% of trades to the upside fail here, right? So, I'm not going to buy here. I don't think it offers a good risk to reward ratio, but I'm looking for a pullback into value. We do have a V2 here on Merck. Here is day 1, day 2, day 3. Day 2 did wash out day 1. Day 2 does look like it. Day 3 does look like it's closing above day 1. So let's see. We broke out here. We came down. We made a higher high. We came back down. But I don't see a lot of sidewards movement on here. There was sidewards movement up here, but not when it started to come down on the selling. It is above a 50 RSI. It's okay. I'm going to mark it. Microsoft, did get overvalued over the 1 ATR channel, back in value. This is where I want to see it, but the bar is larger than 1 ATR. I want to make sure that we don't have continued selling on Monday and that there's some kind of support. It's moving sideways. Look for a V1, V2. So nothing on Microsoft. What do we have? 13 minutes. Look at Netflix. Ugh. Remember I told you yesterday this was a very bearish bar. It was the close was higher than the previous day's close, but the close was lower than the open. This is a big reversal bar. Rejected the third ATR channel. All sorts of negative stuff going on here. We are back in the value zone, so like a lot of stocks now, just want to make sure this stops going down, move sideways, look for a V1, V2. Nike having another strong day today, too high. Philip Morris, here we had this break above the 200-day moving average. Yesterday we had earnings, strong today, rejected the third ATR channel, rejected the 70 as well. We rejected the 70 RSI and we rejected the third ATR channel. So if I was long this, 1,000,000% I would be getting out here. Do I want to short this here? No, I don't. But if they're, if you were a shorting type of person, this is what I would be looking for. A rejection of the 70 RSI and the third ATR channel. So PayPal down big today. I would look for a close under the 250 and back over the 250. Same like we took this trade here. That was exactly the same trade, but I'd like to see this close under and then back over. So nothing there. Qs we have. This one's fine. S&P, of course, we had that small loss overnight. I'll be buying this again at the end of the day. Bonds up slightly today. I would be looking for the bonds somewhere in this range down here to buy a dip. Tesla down today. Nice move up. Looking for a pullback into value. Twitter 3802 RSI. I think really the sweet spot to buy Twitter would be down here somewhere, or possibly this could set us up for a really nice V2 on Monday. Here's day 1, day 2 washes out day 1, and if we closed above day 1's close back in the value zone, that would be good. So I would be looking at Twitter possibly on Monday. UNH still continuing up, too low. Too high. Nothing here on oil. I would like to see oil come back here, test this previous low. This would give us a double bottom with a bullish divergence right around the third ATR channel. So right in here about the 1060 price, I think would be a sweet spot, but nothing yet. VIX up a little bit today. I'm looking for a confluence of a 30 RSI, a V1, V2, possible rejection of the third ATR channel to get long. Verizon up strong today, up very strong. Too high though. Walmart down. You know, we did have this high sell-off, higher high. We had a bearish MACD divergence. This looks like it's a higher low V1 to the downside. Interesting. All right. Energy select, nothing on energy. Financials, nothing there. Real estate, big strong day today. Too high for me to buy. Utilities. I'd like to see utilities go up another day, have a higher low V1, V2, and healthcare still strong. So as far as today is concerned, Boeing, you know, if it closed over 30, it would be legitimate to buy, but I don't like that it's this big of a bar, this big. There's going to be a lot of news on Boeing tonight. I would much rather, I'd like to see Boeing go under 30, close under 30, and then close back up. So who knows? That, you know, it does offer you a good risk to reward, but that's all you have is that 30 RSI. You don't have some support anywhere else. I'm just going to let that one go. Let's take a look here at Merck. Merck on the weekly is moving sidewards. We did reject here last time, didn't like that. So we closed outside of the value zone. We went down. We did go higher, but closed lower. We had a few days down here, but yeah, I'm just gonna let this go. I don't think I'm gonna take any trade today other than the S&P 500, the overnight SPY trade S&P. It'd be interesting to see if Boeing closes below 30 or if it gets below 30 and back over. But interesting that it's holding right at the 30, right? All right, so IWM is fine. MasterCard, I do have an order in to sell MasterCard at the end of the day. Because it rejected all these moving averages, we closed below the previous day's low. It was very close to having a one ATR move for my entry as well. So I, want to consider trailing the stop. But this is all very bearish and negative here. So I am going to sell it. Qs I'm going to hold on to with the 520 cross. So yeah, that looks like it's it, everybody. I think the overnight SPY trade is all that I'm going to take. Let's take a look here. Jackson says, trading in the zone by Mark Douglas. You meant trading mindfully? Totally agree. Don't deny the emotions, but recognize they are passing. Yeah, I think those are two different books, though, Jackson, because the one book, Trading in the Zone, is where it talks about, trying not to have any emotion. So I don't know if Trading Mindfully was his second book, but in the Trading in the Zone, he talks about people's, the best is to have no emotions. But I've never been able to get to that point. Jesse says, some bad news for BA today. Yeah. Yes, bad news. Look at this. I mean, that's huge. It's huge. Stephen Winter says, can you do more analysis on SPY? Okay, in what respect? Based upon the overnight SPY trade or like big picture? I think you probably mean big picture. But we did close above the value zone. Here's the green line. That's the 1 ATR channel. Here's the green line here. This is the negative 1 ATR channel. So we did close above it, which is positive. But I would be waiting now on, and we've had a nice move up, right? This is a nice move up, but having some kind of pullback is to be expected. So I want to wait, see it pull back into the value zone, get closer to a 50 RSI, see if we can find support at the 20-day moving average, somewhere in there. Ideally, I'd like to see this move back down even lower, move sideways, showing that the supply has dried up, because supply is going to cause it to go down. So I want the market to confirm to me it stopped going down, that it is going sideways. I'd like to see a V1 or V2, or in other words, I'd like to see it stab down into new lower areas, immediately reverse back up. So, this little pullback on SPY is not a big deal. A lot of these charts, it's not a big deal. It's just probably some normal profit taking and a return to value. So I hope that helps, Steven. Anthony, hey buddy. Anthony says, hello all, have a great weekend. Greg deserves for everyone in here to hit the like button. Only 3 likes and one is mine. Aw, how rude. Yeah, guys, if you like the podcast, if you've been, if you've been learning something, if it's helpful, yeah, please do me a favor, hit the thumbs up button. It's free and it does help get the channel out to more people. Gamer, can you look at PM again? Thanks. Yes. So, Philip Morris, from a short perspective, we did go above the 70 RSI, and it looks like we're closing under the 70 RSI. We did go above the third ATR channel and underneath the third ATR channel. Those are two, in my opinion, very bearish signals. If there was a time for me to short Philip Morris, this is the day that I would do it. I'm not going to short this, but think about if we went under 30, back over 30, under the third ATR channel, back over the third ATR channel. That would be a bullish signal to me. So this is the exact opposite. This is above 70, under 70, above third ATR channel, under the third ATR channel. So, if I was long this, 1,000,000% I would get out here. If I were a shorting kind of guy, this is what I would be looking for. Although I'm not going to short it, but this is exactly what I would be looking for. Hey Bing He, how you doing? Good to see you, my friend. Does that help, Gamer Squad? What are you thinking about? Are you thinking about shorting it, or what are you thinking? Stefan says, cool, thanks. I'm gambling on some puts over the weekend. Okay. All right, so you bought some puts, or you sold some puts? So yeah, quite the day, huh, everyone? So the Dow's down over 200 points now. Yeah, it'll be interesting where we end up on Monday. But, this was not to be unexpected. I mean, we've had a big move up, not expecting, things don't go up forever. You get normal pullbacks. It's totally normal. So IWM is fine. No problem there. MasterCard, I am going to get out of this and just have to take the loss on MasterCard. Qs, the 5 is still above the 20, so that's mechanical. I'm going to hold that. And SPY did take that overnight loss, but I am buying it again today. So MasterCard's selling at the end of the day. SPY is buying at the end of the day. And that's it. No new positions. So, I mean, it's a bummer to have a down day like this, but again, try to look at the positives. If I think about my own approach over the last few days, I've been pretty conservative. I haven't taken a lot of positions, and mainly because most of the positions were up here overvalued, right? So every penny that you don't lose is like making a penny, right? So, I was fairly light going in today, so I have to be happy with that. And then, may give me an opportunity to get back with some more size at a lower price. I actually did my numbers yesterday after the market closed, and I did make I did make a yearly high for this year yesterday by a few $100s, but I'm happy for that. But anyway, that high is taken out today for sure. So, all right, that's the market, everybody. I did sell MasterCard. Let's take a look here. So I did buy SPY today at 297.97. So that's the new entry for today. $297.97. So that's the new entry where I bought it. Man, my order has not come through on MasterCard, which is concerning me a little bit. I did sell it. I had an order in. Oh, there it goes. Okay, good. Good. So yeah, so currently now, so MasterCard is gone. That was a losing trade. But remember, guys, you have losing trades all the time. You know, lately we haven't had a lot of losing trades. It's been going up, and that's great. But, you know, the way I trade, I'm going to lose 30 to 40% of every single trade I have, right? Every single one I have. So you have to get used to losing. It's just part of trading. You know, that's the industry we're in. You have to learn how to take losses and learn how to take them graciously. If you don't position size, you know, too large, you're still not going to be happy when you have a loss, but it's not going to sting and you'll forget about it by tomorrow. If you're position sizing correctly, if you have a huge position size and goes against you, then you're going to think about that loss longer than that. So, all right, so MasterCard is gone. But again, happy that I phased out, right? You got to take the small victories when you get them. So we have IWM still, Q still, and SPYs. That's all I have. That's all I have for today. Wow, 254 points down. Wow. So anyway, listen, guys, if you guys have any other questions, please let me know and put them into the chat. I'm happy to answer them. Before I get to the answer section, I just want to put in my quick plug, my quick daily plug, and let everybody know I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time. They're one-on-one, they're over Skype, just you and I. I do a 2-hour session, 5 2-hour sessions. So I have a 10-hour course, 5 2-hour sessions, and it's intense. I teach you everything that I know. I teach you, then I have you teach it back to me. We do a lot of chart study. I throw a lot of curveballs at you. You know, and really listen to what your answers are, because I want to make sure that you really have it. But I've had really good success with my clients. I think every client I have has a pretty good understanding of the market from a psychological standpoint, from a technical standpoint, and I've had really good success with them. I've turned some really losing traders into winning traders. And, you know, if you're interested in possibly taking this course with me, let me know. Reach out to me. You know, the price is in the description of this video. My email's in the description. You can email me. And generally what I do before I have a class, and you don't have to commit to the class, but I like to have kind of an interview, 30-40 minute interview with you, and like to learn about you, how you got into trading, what your approach is, what your challenges are, what your goals are, and then I'll put together a lesson plan based upon that, and that's what I will teach you. But I think it's a great investment. I really do think you'll come away with it going, that was money well spent. So, you know, if you'd like to set up that one-on-one, just kind of kick the tires on me and I'll kick the tires on you and see if it's a fit. But, you know, you can send me an email or you can just reach out to me on Twitter and say, hey, I'd like to do the Skype call and you know, take a look at what you're offering. So, and then secondly, if you could hit the thumbs up button, I would appreciate it. It's free. And there's a lot of people out there that need help with their trading. They really do. They need to learn some good trading principles, and that's what I try to do here with this channel. And if you hit the like buttons more, then YouTube will promote it more and get more people here. So, you know, help me, help them, and you can do that by hitting the thumbs up button. So, all right, that's my plug, and thanks for hanging through me with that. And let's see. Hey, Wayne, how you doing, Wayne? Good to see you. Always nice to have you come back. Hope you're doing well. Gamer Squad, yes, I was thinking about shorting it. Yeah. Well, I'll tell you, you know, that is, you know, over the 70, under the 70, also over the third ATR channel, under the third ATR channel. That is, you know, that would be the place to do it. 68.25 RSI. If I had shorted here, any close over 70, that would be my stop to the upside. Let's look at this on the weekly. You know, on the weekly, we found some resistance at the 1 ATR channel, which does act as resistance. So, you know, you're finding resistance on the weekly at the 1 ATR channel. And then on the daily, you have the rejection of the 70. You have the rejection of the third ATR channel. So, yeah, I mean, you're finding confluences of signals on both the daily and the weekly time frame. So did you short it? Did you short it, Gamer Squad? Oh, you bought puts. Is it Steven or Stefan Winters? I think it's Stefan, right? So you bought a lot of puts on the SPY. All right. All right. Well, Stefan wants to go down. He wants it to go down. I wouldn't be surprised. Wouldn't be surprised if it did, especially with the, you know, the selling that we had here in at the close. John says CAG on Thursday's close. Yeah, boy, I like that. Nice V1 rejection of the 200-day moving average. The V1 was up against a small. The V1 was up a small bar. The halfway of the trigger bar, the halfway of the V1 corresponds pretty closely to the 200-day. Yeah, I like that a lot. I like that a lot. You know, I would use a close under the 200-day as my stop, keeping my loss small if I'm wrong. But if I'm right, have a good. I like that, John. Good analysis. Jackson says, I like Greg's video before he gets online. You can't predict the market, but you can predict a transparent and well-informed vid by Mr. G. Oh, thanks, Jackson. That's awesome. You are right, though. You cannot predict the market. You cannot predict the market. And I hope that my videos are transparent. I know they're transparent, well-informed. I hope they're well-informed. Greg, what period do you use for your ATR channels? 20. Yes, that's correct. Actually, guys, the Keltner channels are not EMA, they're SMA. If you can see here, Keltner channels, this is the moving averages. Here's the code, moving averages. If this were an exponential, guys, it would say exponential. So no, the Keltner channels or the ATR channels, yes, the value is 20, but it is SMA. It is not EMA. I use the 20 EMA as a moving average, but based upon the ATR channels, they are based upon SMA, not EMA. And Kurt and Anthony and Jesse will understand this because in our lessons we set that up. But you know, that might be the confusion. I do use a 20 EMA. This is a 20-day EMA. This is the blue line. But as far as how I set up my ATR channels, it's based upon SMA. Oh, okay. So Gamer did take a small position on Philip Morris. Okay, we'll be watching that. Murat says, I closed my oil position 30 in the last seconds. Tomorrow there is a Brexit voting. I didn't want to carry too much leverage over the weekend. Good idea, Murat. Good idea. I mean, if there's big news coming up, it's kind of like earnings, right? So I think it's always a good idea to lighten up or go flat if there's big news. Can you take a look at SLV? I was thinking about a short-term put. Mount Doji, when you say short-term put, you're thinking about buying a put or selling a put? So taking a short position or selling a put would be taking a bullish position. I mean, look, I mean, SLV is just moving sideways, right? I mean, it is moving sideways in the value zone. We know that when things move sideways, that they're eventually going to break one way or the other. We just don't know when, and we don't know what direction. And this is hard to say. I mean, this is really moving sideways. So, you know, I would think about going long SLV if the 5 crossed over the 20, but it's not there yet. Okay, so Mount Doji says he's thinking about buying a put. Okay. Well, I mean, listen, you know, on these sidewards movements like this, like I said, it is going to break out one way or the other. We just don't know what direction it's going to, but at least, you know, buying a put, you know, you have a defined risk. But I really can't say anything much more about SLV than it's just consolidating. You know, it's not particularly bullish or bearish here. It's pretty neutral, but it will move one way or the other. Jackson says, Greg, can you quickly explain on any chart of yours what a 0.45 would be in actual price? Well, it's 0.45 of an ATR. Every single chart's going to have its own ATR. That means it's 0.45 of a regular ATR. So like on IWM, 0.45 means it's 0.45 of a normal ATR, and that 0.45 is 106. Let me see. So essentially, I just did the math. One ATR on the IWM is $2.35. That means that in any particular day, the average movement on IWM is $2.35. I identify what 0.45 of 235 is, and that's 106. And I use that for my profit targets. So if at any particular day I move the value of a 0.45 in my direction, I will take a profit. And on IWM, the value of 0.45 is 1.06. The reason that I picked that instead of like 0.5 or something is one standard deviation, you're going to have resistance at the next standard deviation. You're also going to have some kind of resistance at the halfway of that standard deviation. So that's why I picked 0.45. It's right under where that resistance would be. So a lot of times I'll hit my profit targets because of that. If I hit 2.45 ATRs, that's 0.9 ATRs, and that's right under where the next resistance will be at 1 ATR. So during our lessons, I'm going to teach you this, but I hope that answers your question. But can you quickly explain what a 0.45 would be in actual price. So, okay, so again, IWM, one ATR is 2.35. A 0.45 ATR means $1.06. If we go over to the Qs, a 0.45 equals $1.29. If I pick Boeing, it's going to be big. A 0.45 equals 3.41, meaning a regular, oops. So Boeing, the regular movement, average true range of Boeing is $7.50 any particular day. That's the average that it moves. So 0.45 of 757 is 3.41. So a 0.45 means that it's 0.45 of its average true range. And as far as how much that means in price, it just means every single stock is going to have a different ATR range because it measures it over the last 20 days, divides it, adds it up, divides it, and that's your regular ATR. So 0.45 on any one chart means it's almost a half of what its average true range is, not quite 0.45, but on any particular chart, it's going to be a different number because every chart has different movements. So I hope that makes sense. Murat says, I still made 2% profit on capital. I could make 20% if I did sell during the day. Anyway, I'm very positive. My aim is to double every year, so 2% is 2%. Congratulations, Murat. I never worry about Murat. Murat is very analytical. He puts a lot of thought into his charts. You can see that when we share his charts. I mean, really identifying the support, really identifying the resistance. Yeah, Murat has some good analytical skills. Good job, Murat. Mount Doji says, I agree, a breakout is due. I didn't buy anything yet. Yeah, it's due. Just don't know which way. Just don't know which way. Jackson says, thanks, Greg. I wrote a script to plot a dotted 0.45 on my chart, which I think gives me the same outcome with the calculations. But anyway, yes, we can go through this when we do our lessons. Yeah. I know it sounds complicated, 0.45 and ATR and all this kind of stuff, but it's not. Trust me, it's not. You know, the computer does it, maps it out. You just need to get the basic overlay of what it is, and you'll get it. I promise you. But I know, like, the terms sound kind of complicated, but I promise you they're not. All right, let's see. Yeah, that was pretty brutal. Hey, look at Boeing, everybody. Closed under the 30 RSI. Close under the 30 RSI. And you know, for Jesse and Kirk and Anthony, this big bar down here, this huge bar, you know, from a Fibonacci point, if we bounce, I would expect it. I wouldn't be surprised to have a bounce, but I would expect that if we bounce, we're going to bounce into the 50%. We'll find some rejection at the 50%. I didn't take this trade. I kind of blew it off there at the last second, but I wouldn't have taken it anyway. It closed under 30, which is bearish. It's very bearish. So we're pretty light. We have the remaining shares of Russell. We have the Qs, and we have the SPY. So pretty conservative. So we'll see if that's good or not. If it goes up strong on Monday, then I'll be happy that we still have some positions. If it goes down, I'll look at it as an opportunity to put on some more size at a lower price. Murat said, I would tell you one thing, though. Old Murat would carry this position over the voting and gamble it. So there's an old Murat and a new Murat. Did the new Murrett become the new Murrett after you read Trading in the Zone or Mark Douglas books? Is that when you became the new Murrett? Because the old Greg would have done stuff too. Trust me, he did all of it. All the things you're not supposed to do, I did. I promise you that. But you live and learn, right? I had to learn the hard way, and that's why I'm such a stickler on not gambling through earnings, being careful with your position size. This comes from experience, guys. This does not come from I read it in a book. Although I did read it in a book before I did it, but I still did it. I didn't believe it. So now I've lived it firsthand. Now I believe it. Once bitten, twice shy, right? You get burnt once, you're shy the second time, and that's me, and that's fine. It's really the better place to be. So it's got cold here in Utah overnight, so I'm gonna have to bundle up on my hike today. Dr. Jorgensen, who has been traveling quite a bit, but he's in the chat a lot under Dr. J. He is in Cuba today. First time he went on a vacation a few days ago in Cuba. So Bruce, if you're listening from down there, hope you're having a great time with your friend there in France, and look forward to talking to you when you get back and hear about your trip there. Hope you have a good time. Stay safe. And I'm going to put this in one more time, guys, but this podcast where Steve was a guest on tradingjustice.com is really, really good. I'm going to post it one more time. If you're not doing anything over the weekend, listen to it. It's really, really good. I promise you. And, you might want to fast forward through it. I think it's like an hour and 40 minutes, but the first, I think, hour are the guests, not the guests, but the host talking about the market in general. That's interesting as well. But if you want to just get to Steve's interview part, it's, I think, about halfway through. You might just have to fast forward or something. But I really would suggest that you go and listen to that, because Steve does such a great job of summing up things quickly, succinctly. I jabber, right? And he just does it clearly and concisely. I wish I could do that. But anyway, Jackson says, I'm going to believe it, Greg. I'm young in the game, but I'm going to try and learn from you guys. Yeah, I hope so. I hope so, Jackson. You honestly can just find out yourself, and then you'll do it. Or you can learn from people who have done it and save yourself the trouble. I'm not kidding when I say that. So I'm glad to hear that. Mount Doji says, take care. Have a great weekend. Hey, you too, buddy. And nice trade on, I forgot what it was up there, but we talked about it earlier. But really, really good. Nice going, Mount Doji. Jackson says, enjoy the hike. I will, thank you. Mert says, yes, I blew my account, and then I tried to figure out what was wrong with me. In those depressive days, I found a lot of different books, videos, and the new Murrett was born. Oh, good. Good. Well, yeah, if you go through a really bad time, you hit bottom in trading, you either quit or you get better, right? Just like in poker. People start playing poker, they either lose their money and quit, or they get better. And that's what happens in trading. But sorry you had to go through that, Murrett. I've been there. I understand what it's like, so I can appreciate what you went through. But congratulations that you went through different books and videos, and the new Murrett was born. The new Murrett's going to stay around a long time. The old Murrett may have had huge ups and downs, but eventually the old Murrett's going to go away unless the new Murrett emerges. So, Gamer Squad, have a good weekend, and thanks. You're welcome, bud. We'll be watching Philip Morris. I don't think there's anything wrong with that trade whatsoever. Just remember, if it closes over the 70, that's where that would be my stop. Mert says, Mike Douglas is one of the sources to open my eyes. You mean Mark Douglas? I think you mean Mark Douglas. But yeah, Trading in the Zone was fantastic. Jesse, have a great weekend. Jesse, do you have any positions, by the way? I think Jesse might have Goldman Sachs. Anyway, he may have already gotten out of here, but thanks, bud. Appreciate that, Jesse. Let me know if you have any questions about anything, okay? And you have a good weekend. Stay safe out there. Mark Douglas, sad loss, but what a resource. Yeah. As far as reading books, who had the biggest effect on me over the years, like really had the biggest effect on me, was Mark Douglas with Trading in the Zone, and then his videos that he has online on YouTube from a psychological standpoint, and then from a technical standpoint, Stephen Burns, for sure. For sure. Good night, Jackson. Oh, okay. So Jesse did take, all right. Yeah, it was up today. So that's good. Under the 520 cross in the value zone, it's fine. Yep, it's fine. And then you took Merck today. All right. Let's take a look again at Merck. Yeah, nothing wrong with Merck. Definitely nothing wrong with Merck. I mean, it's a nice V2 here. It's in the value zone. The only thing that scared me away was this bar here, because even though we did make a new high, it didn't really close, so I didn't like that. But if it had closed here and come back into the value zone, see, it didn't. I'd like to see it go down, down, then move sideways. This kind of moved sideways and then went down and then went down. So anyway, you know what you're doing there, Jesse. And I mean, we're above a 53 RSI. We're above the moving averages, V2. Halfway of that washout bar lines up nicely with the 10 and the 50 and the 50 RSI. So, if you're wrong small. Okay, Jesse says he's mechanical on Goldman Sachs. All right, sounds good. I really like MACD's positive. We were, positive on a really negative day, so that's fantastic. Mert says, I learned all technical stuff from Francis Hunt from London. Oh, I've never heard of him. Must have been a good teacher, because you're pretty dang good at it, Murat. All right, everybody, I'm going to head out of here, go hiking. So, Murat, thank you for coming. I appreciate you coming every day, Murat. Hope you're doing well. Let me know if there's anything I can help you with. Jesse, good seeing you. Hope you have a nice weekend. Please stay safe. Jackson, thank you for coming from Australia, and I look forward to working with you as soon as you're ready to go. And thanks for coming. Gamer Squad, great seeing you, my friend. And we'll watch that Philip Morris short and root you on. Let's take a look here. Mount Doji, good seeing you. Have a great weekend. Hope you're doing well. And John, I hope that I hope CAG is going to go up for you. I do like that entry. I think that's what you said. You took the entry. Oh no. Yes, here. I do like that. Nice V1. Close back above the 200 day, gives you a good risk to reward. Everything looks good. So we will watch that. Down a little bit today, but it was a big down day. Stephen Winters, or Stephen Winters, I'm not sure. Sorry if I'm mispronouncing that, but thank you for coming by, and I hope you do well with your puts. And Wayne K, always good to see you, my friend. Let me know if there's anything I could ever help you with, okay? And Bing He, hope you have a good day in Singapore, my friend, and thank you for coming. And Stephen Burns, always a pleasure to see you, my friend. Always an honor. Thank you again for putting me in your Twitter list today. I always appreciate that, and hope that you and Holly have a good weekend and say hello to the dogs. And Kurt, good seeing you. And Kurt, if you ever have any trades, let me know. I'd like to follow your trades now. Really would like to follow them. But who knows? With this pullback, we may have the opportunity. You may have the opportunity for some good setups. And I think that is everybody. I believe that is everybody. Hopefully. All right. And Devil Dog, Wait a minute. I think, is that? Anyway, I'm not sure, so I won't say. So, all right. Thanks, guys. Appreciate it. And go out, do something nice for somebody this weekend. Just a little something. Just a little gesture, just a little wave, just a little hello or a smile. You know, if everybody did that every day, I think the world would be a little bit better place. So have a good weekend. Be safe. And listen to that podcast where Steve gets interviewed. And I put the link up there, Trading Justice. And it's here in the chat. So hopefully see you guys on Monday morning, and we'll see what next week has to bring. All right. Thanks again. Take care, everybody. Bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.